ExxonMobil Q2 2025 results, record earnings and strategic growth. In an impressive announcement, ExxonMobil has shared its results for the second quarter of 2025, highlighting substantial financial accomplishments that underscore the strength of its operational strategies. CEO Darren Woods remarked on the company's performance. This second quarter has again confirmed the effectiveness of our strategic approach and the competitive advantages that allow us to consistently provide returns for our shareholders, regardless of market fluctuations or geopolitical challenges. Key highlights: the company reported an impressive earnings figure of $7.1 billion, along with operational cash flows reaching $11.5 billion. These figures position ExxonMobil as a leader in the industry. In a move aimed at enhancing shareholder value, ExxonMobil returned $9.2 billion to its shareholders. This distribution is a part of a broader strategy to repurchase $20 billion in shares throughout 2025. Notably, approximately 40% of the shares acquired during the Pioneer Natural Resources purchase, since May 2024, have already been repurchased. The second quarter also marked the commencement of startup operations for significant projects including the Singapore Resid upgrade, Fawley Hydrofiner, and Strathcona Renewable Diesel, reflecting ExxonMobil's commitment to innovation and sustainability in its operations. Financial overview. For the second quarter of 2025, ExxonMobil's earnings, according to U.S. GAAP, stood at $7,082 million, a decrease from $7,713 million in the previous quarter. This resulted in earnings per share, EPS, of $1.64, compared to $1.76 in the prior quarter. The year-to-date earnings for 2025 amount to $14.8 billion, which is down from $17.5 billion in the first half of 2024. In evaluating the factors influencing its performance, Woods further highlighted the record upstream production levels achieved during Q2, the highest since Exxon and Mobil merged over 25 years ago. The growth in high-value product sales under Product Solutions was similarly noteworthy. Moreover, since 2019, ExxonMobil has realized $13.5 billion in structural cost savings, a figure that surpasses the cumulative cost reductions reported by all other international oil companies (IOCs) combined. Year-to-date financial insights. Cash flow. The corporation's cash flow from operations stood at $24.5 billion, alongside a free cash flow of $14.2 billion within the first half of the year. Shareholder returns. In total, ExxonMobil's distributions to shareholders amounted to $18.4 billion, comprised of $8.6 billion in dividends and $9.8 billion in stock repurchases. Dividend updates. A quarterly dividend of 99 cents per share has been declared, reinforcing the company's steady commitment to shareholder returns. Debt management and expenditures. ExxonMobil's financial health is demonstrated by a low debt-to-capital ratio of 13% and a net debt-to-capital ratio of 8%. The corporation has paid down $4.7 billion in debt thus far this year. In terms of capital expenditures, the second quarter saw $6.3 billion invested, bringing the year-to-date total to $12.3 billion. The company expects the full-year cash capital expenditures to fall within the range of $27 to $29 billion, aligning with former guidance. Production metrics. The overall production in Q2 increased by 79,000 oil equivalent barrels per day, compared to Q1, with notable contributions from both U.S. and non-U.S. territories. Significant advancements were noted in the U.S., particularly in the Permian Basin, coinciding with strategic asset acquisitions, which fueled production increases despite divestitures in non-core assets. Analyzing the impact of costs, there has been a focus on structural cost savings, reflecting the company's ongoing commitment to operational efficiency. With anticipated cumulative savings projected to reach $18 billion by 2030, there's optimism about achieving sustained profitability amidst fluctuating market conditions. In conclusion, these quarterly results from ExxonMobil present a complex picture of growth and profitability amidst challenges in the global energy market. While the figures are strong, they do warrant reflection on the evolving landscape of the energy sector and the company's strategies to maintain its competitive edge. What do you think about ExxonMobil's current strategic approach in light of these results? Are there areas you believe they should focus on for further improvement? We invite you to share your thoughts in the comments below. ExxonMobil's addressed financial and operational results will be discussed further in a webcast set for 8:30 a.m. Central Time on August 1st, 2025. For those interested in tuning in, visit ExxonMobil's Investor Relations page, https:/investor.exxonmobil.